All right, good morning, guys. It is Eric with MLT here. It is 10:04 in the morning Eastern Time on Wednesday, September 13th. And I wanted to go ahead and do a breakdown trade review from some trades that we had in the trading room this morning. So first things first, I want to start off. We're looking at the NASDAQ futures chart here and pairing that with a trade setup to take in Nadex and then kind of comparing and contrasting the Nadex spreads and the actual Nadex binary and kind of breaking down those trades. So to start off with, I want to talk about the trade setup that we had for this. And that trade setup is right here. So this is the MLT divergence indicator. And what happened was we pushed down through the morning lows here at 9:45 and put in a green arrow. So at that moment in time, no other market was getting new lows on the day. You can see S&P's here holding lows. Russell here actually trying to break out, get new highs at that same time. And the Dow here a little bit weak, but unable to crack these morning lows either. So what I went ahead and did was I bought and we can see this down here. So I went ahead and bought the first thing I bought was the 59.90 by 6,000 spread. That got a little bit cut off there, but we went ahead and bought the NQ, which is the US Tech 100. We bought the 59.90 by 6,000 Nadex spread, right? So Nadex has the traditional spreads, and then they also have the binaries. And then in addition to that, I also went ahead and bought the 59.86, which you can see right here. So the order was sent to buy those at 52 quarters and then filled as well. So one contract on both of these, right? One contract on both. So this was the 11 a.m. expiration, and then I went ahead and did the same thing in the NQ with the 59.86, and I bought that for 52 and a quarter. This one I bought for 92.40, which is going to be a $24 risk here per contract. Go ahead and put these in there. NQ, US Tech 100, Nadex binary. Right, same expiration. Hopefully this is making sense here. Let me know if it is not. Feel free to ask questions as I'm doing this for you guys. So feel free to let me know that. And what we were looking for here, if we look at the chart, was right in this time frame. 9:50 was when this trade was placed. Just looking at current prices trading 59.86s, so that's why we bought the traditional binary there at 59.86s. And then opening print was up here at 92.50s, so that's why we were looking at this 59.90 to 6,000 spread, as it would allow us to get in for 24 bucks. You can see that's 92.40, which puts our break even right at the opening print. So let me know if that's not making sense. Feel free to jot in there. And then the way I wanted to manage this position and break down the analysis is just based on the return of these trades for the capital outlay. So the trade was sent here. We were messing around, showing you guys kind of what that would look like in the order window there. We sent out an order for 94.40s to sell that spread, which would give us about a $20 profit on that spread, right? Because we bought it at 92.40s. But we just sent that out to kind of show you guys that, where it would look at in the order window, and to kind of reverse engineer your potential profit with the spread, right? And then what we did as price rallied here up into 958, so right in this range, You can see the time over here, date and time right there, 9:58. I went ahead and placed an order to sell the spread. So we went ahead and placed an order to sell this spread. We got it at 59.92.40, and then we looked to sell it at 59.96.9. Right, so if I do this math here, and I'll bring over the calculator. So 96.90 minus the 92.40s, right? That's going to give us $4.50 worth of profit. And what we need to do is multiply this by 10, right? And that's going to give us our total profit on this trade. It's $45. Now, minus commissions and things like that, we can factor that all in. So right there gives us a $45 profit on a one lot. And let me know if this is not making sense. Right? Now, the $59.86s, I went ahead and placed an order to sell those. Right? You can see right here, this order was sent. I went ahead and placed an order to sell those at 90, and it actually filled me at 91. So I actually got a little bit of a price improvement on those. So I sent the order at 90. The order got filled at 91. So I bought those at 52 quarters, and I went ahead and sold those for 91. So if we take the 91 minus 52 quarters here, that equals $38.75 in profit, excluding any commissions or things like that. Right? We're not looking at that at the moment. Yes, Leonardo, that was the 5-minute chart. So if we take a look at this, so we made $38.75 on the traditional binary with $52.25 worth of capital. So if I remember how to do math right, 38.75 divided by 52.25, that is a 74% return on money for this one, right? And then if I know how to do math right again, we're looking at 45 divided by 24 and multiply this by 100. So we're looking at 187.5% return on money, excluding commissions, all this stuff. Put this in here, raw numbers, excluding commissions. And commissions are only $1 in, $1 out. So 187.5% return on money compared to a 74% return on money. So almost 2.5 times the return on money for investment, right? So top spread, we bought it for $24. We ended up selling it for $69. Right? I'm trying to compare and contrast the different ways that you guys can look at this to maybe understand the numbers. Right? We bought it at 59.92.40s, right? Which is $24. We sold it at $69. Right? So I'm giving a couple different ways to look at how those spreads are calculated and how the return is affected. And you can see that net us a $45 profit, to whereas the traditional binary, which was the 59.86s, go ahead and punch that in there, netted us a return of $38.75 on profit with $52.25 capital outlay. So anyways, that's the breakdown kind of top to bottom on this trade. You know, if we're looking at the profit potential here, $45 in profits plus $38.75 in profits, $83.75 in profits. And we had essentially 4 trades. We had an in and an out on each of the 2 trades, right? If that's making sense. So minus $4 in commissions, $79.75 after commissions on this trade. So anyways, that's the kind of breakdown, the overall analysis and look at the difference between the spread and the actual traditional binary, and kind of how both of those worked out in this particular trade. So in total, we used 52 quarter plus 24, right? Excluding any commissions. If we want to add commissions in there, that'll be $2, $78.25. So we used a total of $78.25 worth of capital, and that netted us $79.75 in return. So, and again, just trading one contract to show proof of concept and a little bit of education as to how the spreads and the binaries move together. So anyways, that's what I got for you guys. Let me know if you guys have any last minute questions. Feel free to drop them in the chat and I'll answer those in this video. If not, I will get it rendered and put up to YouTube. I see Mark was typing. Feel free to let me know, guys. I want to make sure that if you guys have questions on this trade, we go ahead and get them addressed and answered. Awesome. Thanks, John. Awesome, Mark. Mark is taking the 30-minute course right now. So very good stuff. All right, guys. So no questions. I'm going to go ahead and wrap up the video. If you're watching this on YouTube, thanks for watching. Click the like, comment, subscribe, one of those buttons down below, and we'll keep putting out content like this. Take care.